Welcome to Seeds of Wisdom team. The bustling city of Busan, South Korea played host to a pivotal moment in the global blockchain landscape during its Blockchain Week event. A landmark alliance was forged uniting 6 prominent digital asset exchanges across Asia. The Asia Digital Asset Exchange Alliance, or ADDX, signals a new era of collaboration and innovation in the region's rapidly growing blockchain sector. This alliance represents a joint effort to navigate the complexities of the digital asset market. It seeks to foster a more secure and transparent ecosystem for investors and enthusiasts alike. Digital asset exchanges from 6 Asian countries form alliance. During the Blockchain Week in Busan, Korea, 6 digital asset exchanges unveiled the Asia Digital Asset Exchange Alliance. Mostly of the exchanges are involved with digital securities and real-world asset (RWA) tokenization, but one also offers cryptocurrency. The thing they all have in common is they are regulated exchanges. Some of them are in the very early stages of market traction, but not all. Singapore's ADDX is likely the most experienced of the group regarding digital transactions under its belt. It's raised $120 million in funding with its backers, including the Singapore Exchange, SGS, Temasek, UOB, the Thai Stock Exchange SET, and asset manager Hamilton Lane. Japan's Osaka Digital Exchange, ODX, is bigger than ADDX, but most of its activities are conventional rather than digital securities. It has a digital securities trading arm, START, which launched at Christmas 2023 but is still quite small. ODX was founded by Japan's SBI, with other backers including the Cboe, Nomura, SMBC, and Daiwa Securities. Japan's blockchain ecosystem has seen rapid growth due to its integration into the regulatory framework, said Mr. Kimio Mikazuki, Representative Director and President of ODX. We hope to share our experiences and expertise with the other Asia Digital Asset Exchange Alliance members to support growth mutually. The host in Korea is the Busan Digital Asset Exchange, which has rebranded to the Busan Digital Asset Nexus, BDAN. It plans to launch the exchange soon, after a consortium including the Hana Bank and Hana Securities won the mandate to run it in February. While the focus is on real-world asset tokenization, it also has future cryptocurrency plans. This week, it announced plans to acquire a consumer-targeted gold and silver exchange, Sengold, or Sengold, owned by the consortium leader Itchen. TokenX is the Thai partner in the group. The venture is owned by the Siam Commercial Bank holding company SCBX. It positions itself as a regulated ICO portal, but we don't have knowledge of any recent transactions. GreenX is a Malaysian Sharia-compliant digital asset exchange with 3 listed tokens. Its parent is listed on the Nasdaq with a market capitalization of $6.5 million. Finally, Cambodia's Mekong Digital Exchange, MKX, is a cryptocurrency exchange regulated by Cambodia's Securities Authority. The newly formed Asia Digital Asset Exchange Alliance, announced at the Blockchain Week in Busan, South Korea, unites 6 regulated digital asset exchanges from across Asia. These exchanges are engaged primarily in digital securities and real-world asset, RWA tokenization, with one also offering cryptocurrency trading. Here's a breakdown of each exchange's profile. 1. Singapore, ADDX, backed by prominent investors including Singapore Exchange, SGS, and Temasek. ADDX is an experienced digital asset exchange with $120 million in funding. ADDX has strong traction in digital securities with additional support from asset manager Hamilton Lane and other strategic partners. 2. Japan, Osaka Digital Exchange, ODX. Primarily focused on conventional assets, ODX also manages a smaller digital securities trading arm, START, launched in December 2023. Founded by SBI, ODX benefits from partnerships with Cboe, Nomura, SMBC, and Daiwa Securities. ODX aims to contribute its regulatory experience to the alliance. 3. South Korea, Busan Digital Asset Nexus, BDAN. Formerly the Busan Digital Asset Exchange, BDAN focuses on RWA tokenization and has plans to expand into cryptocurrency. Backed by Hana Bank and Hana Securities, BDAN is preparing to launch soon and recently announced a strategic acquisition of Sengold, a gold and silver exchange. 4. Thailand, TokenX, owned by SCBX, Siam Commercial Bank's holding company. TokenX functions as a regulated ICO portal, although it lacks a recent transaction record. 5. Malaysia, GreenX. As a Sharia-compliant exchange, GreenX lists 3 tokens and has a NASDAQ-listed parent company with a market capitalization of $6.5 million. 6. Cambodia, Mekong Digital Exchange, MKX. Specializing in cryptocurrency, MKX is regulated by Cambodia's Securities Authority, broadening the alliance's asset diversity. This alliance reflects a collaborative movement among regulated exchanges in Asia to share knowledge, support each other's growth, and possibly harmonize standards for digital assets and tokenized real-world assets across diverse regulatory environments. The formation of the Asia Digital Asset Exchange Alliance marks a significant step in the digital asset industry for several reasons. 1. Regulatory progress and legitimacy. This alliance brings together regulated exchanges from countries with diverse regulatory frameworks. By aligning on standards, they provide a more unified, reliable front in the digital asset space, which can reassure investors and spur regulatory acceptance. Their compliance shows that digital assets are being integrated into traditional financial frameworks across Asia, potentially encouraging other regions to consider similar pathways. 2. Cross-border innovation in digital securities and RWA tokenization. With a focus on digital securities and real-world asset (RWA) tokenization, this alliance could push forward innovations in how physical assets, like real estate, commodities, or art, are represented digitally, allowing for fractional ownership, improved liquidity, and easier cross-border transactions. Real-world asset tokenization is a growing area, and collaboration could accelerate its adoption and standardization. 3. Market accessibility and scale. Asia has some of the fastest-growing digital asset markets, and this alliance represents key players from multiple countries pooling their expertise and market reach. By collaborating, these exchanges can scale quicker, support each other's growth, and create more accessible markets for global investors. The potential for cross-listing and mutual support in attracting investment might enhance each member's market traction, especially newer players. 4. Economic and financial impact. Asia's economies are highly interconnected, and digital assets are becoming integral to trade, investment, and financial inclusion. The alliance can act as a catalyst for economic integration and innovation by allowing assets to move more freely and securely within the region, enhancing regional trade and investment. 5. Diversification and risk mitigation. With the involvement of various asset types, from digital securities to cryptocurrencies, this alliance diversifies exposure for investors and the markets they serve. This diversification not only mitigates risks, but also enhances the resilience of each exchange by tapping into multiple revenue streams and asset classes. 6. Setting standards for the future. As the digital asset industry matures, regional alliances like this one could set standards for interoperability, transparency, and security, which are crucial for widespread adoption. Their success could serve as a blueprint for future alliances in other regions, further connecting and stabilizing the global digital asset ecosystem. In short, this alliance represents a collective effort to build a stable, integrated digital asset market in Asia. It could drive innovation, bolster investor confidence, and pave the way for a more connected and efficient global digital economy. The Asia Digital Asset Exchange Alliance can play an indirect but notable role in the context of the Global Currency Reset (GCR) and Revaluation (RV) by providing infrastructure, legitimacy, and interoperability for digital assets, which could include asset-backed currencies or tokenized assets aligned with GCR-RV objectives. Here's how. 1. Asset-backed digital currencies. The GCR-RV vision involves transitioning from fiat currency to an asset-backed monetary system where currencies derive value from tangible assets like gold, silver, or other commodities. The alliance's focus on regulated exchanges and real-world asset (RWA) tokenization can create pathways for tokenized, asset-backed currencies or securities to be traded securely and transparently, supporting the infrastructure needed for a GCR-aligned financial system. 2. Interoperable infrastructure for cross-border transactions. GCR-RV aims to establish a fairer, more transparent financial ecosystem, often with a focus on global inclusivity and reduced reliance on centralized financial institutions. The Asia Digital Asset Exchange Alliance, by uniting exchanges across various countries, could help create the infrastructure for cross-border transactions and seamless currency exchanges, essential for a global financial reset where different asset-backed currencies would need interoperability and regulatory compliance across borders. 3. Enhanced transparency and regulatory compliance. GCR-RV is often viewed as a shift towards transparency, and these regulated exchanges can demonstrate that digital assets can operate within strict regulatory frameworks. This approach aligns with GCR goals of increased transparency, helping to legitimize new forms of currency and asset-backed tokens that might emerge in a post-RV environment. 4. Market liquidity and stability for asset-backed currencies. By supporting the tokenization of real assets, such as commodities and securities, the Alliance can provide a more stable and liquid market for asset-backed digital currencies. Stable, liquid markets are critical for a GCR-RV framework, where currency values need consistent backing and availability for redemption. This alliance can help build the liquidity infrastructure required for asset-backed currencies to succeed in global markets. 5. Pilot programs for future financial systems. The collaboration between these exchanges could act as a testing ground for a regulated asset-backed currency ecosystem, which would align closely with GCR-RV objectives. Lessons learned from this alliance could be applied globally to support digital asset-backed currencies as stable alternatives to fiat money. While this alliance isn't directly about the GCR-RV, its focus on regulated asset-backed digital assets and cross-border cooperation provides a foundation that aligns well with the goals of GCR-RV. It offers practical infrastructure, trust, and frameworks that could be adapted to support asset-backed currencies within a revalued, globally integrated financial system. Here's a deeper look at how the Asia Digital Asset Exchange Alliance's formation could support or accelerate the GCR-RV objectives in tangible ways. 1. Asset digitization and secure storage, support for GCR-backed assets. The GCR-RV envisions currency values pegged to tangible assets like precious metals, natural resources, or other commodities. Digital asset exchanges specializing in RWA, real-world asset tokenization, offer a secure way to digitize and manage these assets on the blockchain, making it easier to back digital or physical currencies with actual value. Transparency and verification. Digital assets on regulated exchanges provide a verifiable ledger for each asset's origin and value, which is crucial for maintaining transparency. For GCR/RV-backed currencies to gain global trust, secure digital representation and transparent tracking of assets like gold or other commodities are essential, and blockchain technology provides these capabilities. 1. Enhanced trust and standardization. Unified regulatory approach. Each country in the alliance represents a regulated exchange, meaning the alliance is committed to compliant, standardized practices across different jurisdictions. Such an approach mirrors the GCR-RV goal of a transparent, regulated global system and could even set the stage for future currency alliances or interoperable standards. Building trust in digital assets. One of the challenges for GCR-RV is fostering trust in the value of new currencies. The Alliance's commitment to regulation and security could help investors, institutions, and even governments gain confidence in using digital platforms for asset-backed currency exchanges. 1. Infrastructure for real-time settlement and global accessibility. Blockchain-based settlement. The exchanges within this alliance use blockchain to achieve faster, more transparent transactions, which is key for an asset-backed currency system to function smoothly on a global scale. Real-time settlements on regulated exchanges enable rapid conversions between currencies and assets, which is vital for the seamless operation of a GCR-RV economy where asset-backed currencies are continually valued and exchanged. Accessible financial network. The GCR-RV vision includes financial inclusivity and reducing barriers to economic participation. Blockchain-based exchanges with regulated frameworks can create a globally accessible network for exchanging asset-backed currencies where individuals from various countries can securely hold, trade, and convert their currencies with minimal friction. 1. Global economic stabilization through diversified asset classes, balancing currency with asset classes. The alliance covers a range of assets beyond cryptocurrencies, including tokenized commodities and other real-world assets. A GCR-RV economy based on diversified tangible assets such as gold, real estate, or commodities could reduce volatility and support stable, fair currency values, as each currency's value is tied to a variety of stable, real assets. The alliance's diverse asset classes support this kind of balanced, stable economic model. Reducing volatility. Through regulated exchanges, these asset-backed currencies can potentially offer more stability and protection from volatility, especially compared to fiat currencies or non-backed digital assets. Stability in asset-backed currencies would promote the economic security that GCR-RV proponents aim to bring to the global financial system. 1. Cross-border alliances as a precursor to GCR-RV frameworks, model for cross-border cooperation. The alliance exemplifies how regulated exchanges from different countries can collaborate to support digital asset markets. For the GCR-RV to function as a truly global system, a collaborative infrastructure for digital assets is essential. This alliance can act as a prototype for global asset-backed currency networks, establishing trust, collaboration, and compliance standards. Potential integration with global economic coalitions. Similar to alliances like BRICS or ASEAN, this digital asset exchange network could integrate or work alongside these coalitions, facilitating a broader reach and encouraging the participation of additional countries in asset-backed currency systems. By laying the groundwork for such integrations, this alliance might attract other regions looking to establish similar structures. 1. Testing ground for quantum financial systems and future technologies. Quantum Financial System (QFS) compatibility. A core part of GCR-RV's future might involve the quantum financial system, which relies on advanced technology for secure, instant transactions. As a tech-forward alliance, these exchanges could serve as testing grounds for QFS-related technologies or standards, particularly in securely tracking and managing asset-backed digital tokens across borders. Experimentation with distributed ledger technology, DLT. Since each of these exchanges already deals in regulated digital assets, the alliance could be at the forefront of experimenting with decentralized or distributed ledger technologies that underpin QFS. By proving the viability of DLT for secure, asset-backed currency exchange, the alliance could make it more feasible for GCR-RV to integrate advanced ledger systems for global asset management. 1. Economic inclusivity and wealth distribution. Accessible entry to asset-backed wealth. The GCR-RV movement emphasizes fair distribution of wealth and economic inclusivity with a goal of leveling the playing field. Asset-backed digital exchanges allow individuals to invest in fractional ownership of assets like real estate or precious metals, providing a way for more people to build wealth. This aligns with the GCR-RV goal of accessible wealth distribution by allowing broader participation in tangible assets through fractional tokenization. Reduce dependence on centralized banking. By decentralizing access to assets and allowing direct trading, digital asset exchanges reduce dependency on centralized financial institutions. This helps align with the GCR-RV vision of a less centralized financial system, where individuals have more direct control over their wealth. In summary, while the Asia Digital Asset Exchange Alliance is not directly part of GCR-RV, its focus on regulated, asset-backed digital assets, interoperability, and secure infrastructure resonates with GCR-RV's goals. It offers a foundation of trust, transparency, and technology that could ultimately support the vision of a globally integrated, asset-backed financial system, paving the way for a seamless transition to a stable, decentralized, and asset-backed global economy. The Asia Digital Asset Exchange Alliance can have several potential effects on currency, especially within the context of asset-backed currencies and the movement toward global financial reforms like the GCR-RV. Here's how this alliance might influence currencies. 1. Pathway for asset-backed digital currencies, direct value tied to assets. By facilitating the tokenization of real assets like precious metals, commodities, or even real estate, this alliance supports currencies backed by tangible assets. Instead of relying on fiat or trust-based currency valuations, asset-backed currencies would have intrinsic value tied to real, verifiable assets on the blockchain, aligning closely with GCR-RV principles. Stable value in currency markets. A currency backed by real assets is inherently more stable because its value is pegged to a consistent resource, unlike fiat currencies that can be prone to inflation. This stability is particularly attractive for economies aiming to mitigate the volatility of currency markets, providing a trusted alternative for both national and cross-border transactions. 1. Enhance global currency interoperability, cross-border transactions made seamless. The alliance is a coalition of regulated exchanges in multiple countries, fostering easier exchange of tokenized assets across borders. This creates a structure where different asset-backed currencies, from gold-backed tokens to real estate-backed tokens, could be traded or exchanged more smoothly, reducing barriers to cross-border transactions. Liquidity across digital and physical assets. With support from regulated exchanges, digital currencies backed by physical assets gain liquidity, allowing them to circulate and hold value internationally. This interoperability provides the infrastructure for a seamless global economy where digital currencies can operate alongside traditional ones, opening pathways for widespread adoption of asset-backed currencies. 1. Increased trust and confidence in new currencies. Regulatory oversight brings credibility. A common challenge for asset-backed currencies is building trust, especially as many digital currencies face regulatory scrutiny. By participating in a regulated alliance, asset-backed currencies gain credibility. Regulated exchanges help ensure compliance, security, and transparency, which are key factors in gaining both public and institutional trust. Transparency in currency backing. The use of blockchain for digital currencies allows for verifiable tracking of assets backing the currency. This transparency fosters confidence in the currency's value, especially critical in an asset-backed system where the underlying assets must be verifiable, accessible, and stable. 1. New economic models for central banks and national currencies. Central bank digital currencies, CBDCs, backed by assets. Many countries are exploring central bank digital currencies, CBDCs, and this alliance's focus on regulated asset-backed exchanges could serve as a model for central banks considering asset-backed CBDCs. An asset-backed CBDC would align with GCR's emphasis on asset-backed value, using tokenized assets stored and verified on the blockchain for stable, transparent backing. Shift toward decentralized and asset-linked currencies. The success of regulated asset-backed exchanges could influence governments to reconsider the foundations of national currencies. Instead of traditional fiat, these asset-backed models might inspire a shift toward decentralized asset-linked currencies, potentially enhancing currency stability and reducing inflationary risks associated with fiat currency issuance. 1. Reduced currency volatility and inflation control. Stabilized currency values with tangible backing. As these exchanges tokenize and manage real assets, they provide a potential base for currency values anchored in tangible assets. A shift to asset-backed currencies means countries could better control inflation, since the currency supply would be more directly tied to real assets rather than being increased without limit. Economic resilience against global market fluctuations. With a regulated asset-backed structure, these currencies are less vulnerable to economic crises or manipulations that can affect fiat currencies. For example, an oil-backed or gold-backed currency would retain intrinsic value even if global fiat markets experience volatility, providing economic resilience. 1. Influence on global trade and currency exchange. Enhance stability in trade agreements. In a GCR-aligned world, stable asset-backed currencies could become the standard for international trade, reducing reliance on traditional reserve currencies like the US dollar. With tokenized real assets accessible on regulated exchanges, countries can trade using asset-backed currencies that maintain stable value, reducing exchange rate volatility and fostering equitable trade terms. Currency diversification for global investors. Investors and institutions could diversify portfolios with regulated asset-backed currencies traded on these exchanges, reducing risk exposure to fiat currency fluctuations. This diversification could encourage more stable investment patterns and support a balanced global economy where multiple asset-backed currencies operate in parallel. 1. Foundation for the Quantum Financial System, QFS, and Digital Currency Evolution. Blockchain and quantum ledger integration. The alliance's focus on digital asset exchanges sets the stage for integration with a quantum financial system, where advanced ledger technology would securely track all asset-backed currencies and digital assets. This kind of secure, high-speed system is crucial for a fully functional global currency network under GCR-RV principles, where transactions must be transparent, nearly instant, and impossible to manipulate. Proof of concept for digital financial ecosystems. This alliance acts as a real-world prototype for how a regulated digital currency ecosystem could operate, providing insights into how the GCR-RV can integrate digital assets and currencies into a compliant and trusted system. It demonstrates how digital asset exchanges backed by real-world assets can meet regulatory standards while facilitating secure, transparent transactions. 1. Paving the way for future global currency reforms. Testing grounds for GCR/RV compatible currencies. If the GCR-RV model moves toward widespread adoption of asset-backed currencies, the alliance's regulated exchanges can act as testing grounds for these currencies, ensuring they function within regulatory boundaries, gain market acceptance, and offer stable value backed by real assets. Setting a precedent for global standards. The collaboration among multiple countries shows that an international standard for digital asset-backed currencies is achievable. By creating standards for interoperability, security, and regulatory compliance, the alliance helps to lay the groundwork for a new global financial framework compatible with GCR-RV objectives. In summary, the Asia Digital Asset Exchange Alliance supports the practical infrastructure, credibility, and regulatory groundwork essential for introducing and stabilizing asset-backed digital currencies. This aligns with GCR-RV goals of global currency reform by facilitating a trusted, transparent, and asset-backed global currency ecosystem. Such an alliance provides the blueprint for a stable, decentralized, and inclusive economic model, potentially setting the stage for the next evolution of currency in a revalued global financial system. The new system for the GCR-RV appears to lean heavily on digital currencies and digital asset infrastructure, particularly in the context of regulated, asset-backed digital assets. Here's a closer look at why this shift to digital currencies is critical and how it fits into the GCR-RV framework. 1. Digital infrastructure for asset-backed currencies. Tokenization of real assets. In the new system, real assets like gold, silver, real estate, or commodities can be digitized, tokenized, to represent their value on the blockchain. Each token represents a specific quantity or share of a physical asset, providing tangible backing for a currency. This is the essence of asset-backed digital currencies and aligns with GCR/RV's goal of basing currency value on real-world assets. Blockchain transparency. Digital currencies on the blockchain offer transparent, tamper-proof ledgers, which are essential for tracking the value and ownership of asset-backed currencies. This transparency builds trust in the system, allowing users to verify that each unit of digital currency is actually backed by real assets, as GCR-RV advocates for transparency and stability. 1. Real-time and cross-border settlements. Instant transactions. Digital currencies allow for instant, low-cost transactions across borders, which is difficult to achieve with traditional fiat currencies. For GCR-RV, a digital system can support the global circulation of asset-backed currencies without the delays, fees, and complexities of traditional banking. Enhanced liquidity. Digital asset exchanges, particularly regulated ones, provide liquidity for these new currencies by enabling rapid buying, selling, or exchanging. In a GCR-RV context, this is crucial for maintaining the stability and accessibility of currencies backed by tangible assets. 1. Decentralized and sovereign financial control. Decentralization of currency control. Unlike centralized fiat currencies controlled by central banks, digital currencies, especially on decentralized platforms, offer a level of autonomy to individuals and institutions. By being less reliant on centralized entities, digital currencies in the GCR-RV system could foster a more equitable and accessible financial landscape where people have direct control over asset-backed currency. Independence from traditional reserve currencies. The digital system allows countries to bypass dependence on traditional reserve currencies, such as the US dollar, and instead rely on stable, asset-backed digital currencies. This shift can reduce currency manipulation and provide a stable value basis for countries adopting the new system. 1. Integration with quantum financial systems, QFS. Advanced ledger technology. Digital currencies are well suited for integration with quantum financial systems, QFS, which aim to enable secure, instantaneous transactions on an unhackable platform. QFS is intended to support a stable and fraud-proof global currency system, which digital currencies on the blockchain can readily accommodate. Asset verification and anti-fraud mechanisms. The combination of digital currencies with QFS technology could allow for real-time asset verification, ensuring that each digital currency unit remains fully backed by physical assets. This feature prevents inflationary practices where currencies could be printed without backing. 1. Reduced risk of inflation and enhanced stability, fixed supply linked to real assets. Digital currencies in this system are likely to have a fixed supply based on asset backing, which limits inflation. Unlike fiat currencies, which can be printed without limits, asset-backed digital currencies have value tied to tangible resources, thus stabilizing currency value over time. Buffer against economic instability. Asset-backed digital currencies act as a hedge against currency devaluation and inflation. In the GCR-RV system, this feature is crucial for providing a stable, sustainable currency that maintains purchasing power even in times of economic uncertainty. 1. Global adoption and interoperability. Cross-national acceptance. Digital currencies can be designed for interoperability, meaning they can be exchanged across countries without major issues of conversion and valuation. By using blockchain, countries in the GCR-RV system could achieve a unified, globally accepted set of asset-backed currencies that reduce dependence on any single nation's fiat currency. Enhance trade and investment opportunities. A digital currency system makes it easier for businesses and investors to conduct international transactions in a stable, asset-backed currency. This accessibility can drive global trade, open up markets, and encourage investments in developing regions, aligning with GCR-RV goals of global economic balance and inclusivity. 1. Financial inclusion and accessibility. Inclusive economic participation. Digital currencies can be accessed by anyone with an internet connection, allowing more people to participate in the new asset-backed currency system. In many parts of the world, access to traditional banking is limited, and digital currencies can provide an inclusive financial alternative, aligning with the GCR-RV objective to democratize wealth. Fractional ownership. Digital currencies allow for fractional ownership of assets, meaning even those with limited resources can hold a share in valuable assets, whether gold, real estate, or commodities. This accessibility aligns with GCR-RV principles of equitable wealth distribution. 1. Testing ground for future financial systems. Scalable and adaptable. Digital currencies provide a platform for testing and refining the asset-backed currency model on a smaller, adaptable scale before full global rollout. The alliance of exchanges and pilot programs can reveal best practices and potential obstacles, refining the GCR-RV framework for future scalability. Prototype for new global standards. Through digital currency alliances, we can test standards for compliance, interoperability, and transparency, which are essential for a functional global financial reset. This groundwork is crucial in setting up the infrastructure for a GCR/RV compatible global financial system. In essence, the new system's emphasis on digital currencies allows for a stable, transparent, and accessible currency model aligned with GCR/RV goals. By ensuring that each currency unit is backed by a real asset, the system offers a sustainable alternative to traditional fiat, promotes financial inclusion, and sets a foundation for a revalued, globally integrated economic structure. Real assets are tangible or physical assets that hold intrinsic value and can be owned or controlled by individuals, organizations, or governments. They differ from financial assets like stocks and bonds, which are value representations rather than physical entities. Here are some of the key types of real assets commonly used as backing for asset-backed currencies and in investment. 1. Precious metals. Gold. Gold is one of the most historically trusted and widely used forms of real asset for backing currencies, especially because it holds value well over time and is recognized globally. Silver, platinum, and palladium. Other precious metals like silver and platinum are also used as stores of value and can act as solid, inflation-resistant asset backings for currencies. 1. Commodities. Oil, crude oil is a high-value real asset essential to global energy markets. It has been used by some countries to peg their currencies or economies due to its demand and trading volume. Natural gas. Like oil, natural gas is in demand globally and is a valuable real asset for energy production and economic stability. Agricultural commodities, commodities like wheat, corn, coffee, and sugar can be classified as real assets. While less common for currency backing, they hold significant value in global trade. Minerals and raw materials. Other minerals like copper, iron, and lithium are used in manufacturing and are valuable in industry, though they're less common for currency backing. 1. Real estate and land. Land. Undeveloped land itself is a tangible asset that holds intrinsic value, especially if it is in a strategically valuable location. Commercial real estate, office buildings, shopping centers, hotels, and industrial properties can act as high-value assets, generating cash flow and serving as collateral for loans and investments. Residential real estate, homes, and apartment buildings are also real assets with intrinsic value, with land and structure value that typically appreciates over time. 1. Infrastructure assets. Transportation and logistics. Infrastructure like airports, seaports, highways, and railways hold significant value as they are essential to economic activity. Utilities and energy infrastructure, power plants, water treatment facilities, and renewable energy assets like wind and solar farms are valuable, tangible assets that can support sustainable economies. Telecommunications networks, fiber optic networks, data centers, and telecommunications infrastructure are considered valuable real assets, especially as digital connectivity becomes essential. 1. Natural resources and agricultural land, timberland, and forests. Timberland holds value because of the production of wood and paper and its role in environmental sustainability. Farmland. Farmland can produce crops and livestock, giving it ongoing value, especially in food production and sustainable agriculture. Water rights. In regions where water scarcity is a concern, water rights or access to water bodies can be a highly valuable real asset. 1. Collectibles and cultural assets. Art and antiques. High-value art, historical artifacts, and antiques can hold significant value over time, especially unique pieces that appreciate in value. Precious stones, diamonds, and other gemstones are physical valuable items, though less commonly used as currency backing. Rare collectibles. Certain collectibles, such as rare coins, stamps, and cars, also hold intrinsic value, but are less liquid compared to other real assets. 1. Intellectual property and technological assets. Patents and trademarks. While not tangible, intellectual property can be considered a real asset in the sense that it provides a revenue stream and has intrinsic value, particularly patents for innovative technology. Energy generation patents. Certain patents in energy or renewables can hold substantial economic value given their importance in reducing carbon footprints and supporting sustainable development. 1. Currency reserves and sovereign wealth funds. Foreign currency reserves. Some countries hold foreign currency reserves as a real asset, giving them leverage in international trade and currency valuation. Sovereign wealth funds. These funds often consist of a diversified portfolio of real assets, including investments in land, resources, infrastructure, and even equities held by governments as a store of value. Importance of real assets in a currency system. In the context of the GCR-RV and asset-backed currency systems, real assets provide a stable, intrinsic basis for currency value. By backing a currency with real assets, the currency gains tangible value, which can help mitigate inflation and currency devaluation while supporting economic resilience. This asset backing can also reassure investors and holders that the currency is not merely symbolic but has a real-world foundation tied to assets that will hold or increase. The ADDX brings together leading exchanges from 6 key markets: Singapore, Japan, South Korea, Thailand, Malaysia, and Cambodia. Each member brings a wealth of experience and expertise to the table. Their combined influence promises to shape the future of digital assets in Asia and beyond. The formation of this alliance is a testament to the growing recognition of blockchain's transformative potential. This alliance arrives at a time of increasing interest in blockchain technology from both the private and public sectors. The ADDX is well positioned to capitalize on this momentum. It aims to drive the development of a more robust and inclusive digital asset ecosystem in Asia. At the heart of the ADDX lie 6 founding members, each a leading light in their respective markets. From Singapore we have, known for its focus on exchanges specialization, Representing Japan is a powerhouse in the realm of exchanges specialization. South Korea's brings its expertise in exchanges specialization to the alliance. Thailand's burgeoning blockchain scene is represented by, recognized for its work in exchanges specialization. Malaysia's adds its strength in exchanges specialization to the mix. Finally, Cambodia's rounds out the alliance, bringing its experience in exchanges specialization. A key unifying factor for the ADDX members is their unwavering commitment to regulatory compliance. Each exchange operates within the legal frameworks of their respective jurisdictions, prioritizing investor protection and market integrity. This shared focus on compliance forms a solid foundation for the alliance's activities. It fosters trust and transparency among its members and the broader digital asset community. The ADDX's emphasis on regulation aligns with the growing global trend towards establishing clear guidelines for digital assets. By adhering to best practices and engaging with regulators, the alliance aims to create a more stable and sustainable environment for blockchain innovation to flourish. This approach not only mitigates risks but also paves the way for wider adoption of blockchain technology across various sectors. The formation of the ADDX carries significant implications for the future of blockchain in Asia and beyond. By pooling their resources and expertise, these 6 exchanges are poised to unlock a wave of innovation and growth in the digital asset space. Collaboration is key. The ADDX facilitates the sharing of knowledge, best practices, and technological advancements among its members. One of the most significant potential benefits of the ADDX is its potential to harmonize regulatory approaches across different Asian markets. This harmonization can simplify cross-border transactions, attract more institutional investment, and create a more level playing field for businesses operating in the digital asset space. Furthermore, the alliance can leverage its collective influence to advocate for blockchain-friendly policies and promote the responsible development of the industry. The launch of the ADDX marks a pivotal moment in the evolution of Asia's digital asset landscape. It signifies a maturing market where collaboration and regulatory compliance are paramount. As the alliance matures, its impact is likely to be felt far beyond the digital asset market. Quote about the importance of collaboration and regulatory clarity in the blockchain space, says name and title of a key figure from one of the exchanges. Quote about the potential of the alliance to drive innovation and growth in the Asian blockchain industry adds name and title of a key figure from a different exchange. The ADDX has the potential to unlock the transformative power of blockchain technology across various sectors, from finance and supply chain to healthcare and government. By fostering a more robust, transparent, and inclusive blockchain ecosystem, the ADDX is setting the stage for a new era of innovation and growth in Asia. Don't miss the bus and subscribe. Thank you.